Hi, all. This is Day and Arry with Windshield Time. Thank you for joining us again.
Woohoo! I'm so excited about this.
So this intro is going to be super quick. We're including the full Mark Yusko interview that we did last week, and pretty excited to present it to you guys.
I am so excited about this one. It was so good. Yep.
Yeah, it was a lot of fun. I was kind of nervous, and so people might be able to hear my nervousness in my voice.
No, I could not tell at all. I mean,
couldn't
literally.
tell?
No, I couldn't tell. You did really great.
Thank you. So yeah, Mark Yusko is a very prominent voice in the crypto Twitter, or shall we say Bitcoin Twitter world.
Mm-hmm.
So I'll just go ahead and do the Satoshi math right now. Today's Monday, August 5th, 2019, about 1:20 p.m. I checked a little while ago on my Blockfolio app for the price of Bitcoin, trading at $11,788.
Nice.
So it did hold up through the weekend. It was a really, really interesing
Everything's
trading
crashing
weekend.
except for Bitcoin.
Yeah, today was the at one point the low was like negative 936 points on the Dow trading this morning. So it was a pretty wild trading day.
I would call it a bloodbath day. It's like the lowest of 2019 across many different fronts, right?
I believe
Even
so.
the Chinese yuan is on a low.
Well, that was part of the
Trade wars, yeah.
Yeah. So not to delay too much. So you divide the $1, $1 US fiat by 0.0011788, which is the $11,788, and you get 8,483 satoshis.
So stack sats with
Stacking
Satoshi math.
sats is harder because above $10,000.
Mm-hmm.
For $1, you get 10,000 sats.
Great.
But for every dollar it goes up above $10,000, you get less sats. Exactly.
I'm starting to get it.
Yes.
It only took like 2.5 months or something.
2.5 months of Satoshi math. Exactly. So, so quick introduction of myself. My name's Day again, and I was a sales engineer working on wide area networks for a couple of decades, really long time. And I was servicing enterprises who wanted to build their own private regional, national, and international networks based on internet technology, and then also those same very large enterprises wanting to get very high-speed, fast internet connections.
And hi, y'all. I'm Arry. I've had a couple careers. I'm mostly a creative artist and musician, and then I went into the world of management consulting for a little bit over a decade. And then I've been in the world of startups and investing, and most recently in blockchain. I'm the chair of the Cascadia Blockchain Council, powered by the WTIA, which is the Washington Technology Industry Association. It's the largest technology association in the United States, with over 1,100 member companies. We provide one collective voice for all the technology companies from Portland up to Vancouver. And on the Blockchain Council, it's all very focused on blockchain, partnering with the policymakers and the investors and the innovators. And so the trifecta working together to create the new future.
Awesome. Because it's hard to really do anything really, really big. And when it comes to a transformative evolutionary technology like blockchain, there's a lot of unknowns with respect to legislation and policy.
Yep.
Yeah.
Yep. So it's really, really important that we work shoulder to shoulder and really, really be proactive about it.
Exactly. Okay. So, without too much further ado, I think Arry had a couple of other thoughts with respect to the Mark Yusko interview, because we're trying to kind of mix it up a little bit. There's a lot of podcasts out there. It's a very, very sharing world that we're in when it comes to Bitcoin and crypto and blockchain, and so we're trying to put our own little twist onto it. So there's a lot of investing chat, but there's a lot of there's a decent amount of personal chat too in the conversation that we had.
Right. And so what we're trying to do, I mean, you'll see in the style that Day and I have been doing, we're being very inclusive and authentic, and also sharing all aspects of our lives, including the parenthood and the career and the investing and the money. And I mean, you've even seen us get a little bit tense on the podcast because, that's life, right?
Yeah.
And so we think, when you look at investors and people that are very prominent, like Mark Yusko, very often when they're interviewed, they're only looked at from one perspective, their investment and their skill and their craft. Well, their whole other lives are being hidden. And so we're really interested in, what makes Mark Yusko Mark Yusko. how does he eat? How does he read? What's his family life like? All the things that make him the very special man he is. And so that's the opportunity that we bring in that kind of interview.
We're going to roll the reading of the disclosures disclaimers with Dom from Coin Me again, as usual.
And then it's time to hear the full interview by Mark Yusko.
It's a little bit of a long one, but I think if you're hanging on to the end, there's some interesting twists that you won't hear other places, brought to you by our dear Arry here.
Thanks.
All right, so let's roll, Dom. Thanks a lot, and then it'll go straight into the interview after that.
All right.
Thanks.
Hi, y'all. This is Dom from Coin Me, or you might know me from the Blockchain Minute, your daily show for the most important story on the blockchain. None of the statements or opinions expressed in this podcast by the guest or its host is to be taken as financial advice or a solicitation of any kind to participate in a conservative or risky or speculative financial instrument that may or may not require accredited investor status as defined by either the Securities and Exchange Commission of the United States of America or independent thought and rational thinking from the laws of humanity. By listening to this podcast, you acknowledge that the hosts, Arry and Day, and their guests are not financial advisors of any kind, but only humans and not sentient intergalactic alien life forms. All statements made in this podcast by any living or dead, or unborn, or zombie, or robotic entity in the past, present, or future of the space-time continuum of this known universe are purely ironic or coincidental thoughts and opinions. Moments of sarcasm, sadness, education, glee, entertainment, or any other emotion that may be found in this podcast are fully your responsibility and reaction that may or may not be intended for the listener in any way, shape, or form. Mature adult discretion is strongly advised. Thank you for listening.
2 years ago.
Oh, that's how you and Pop met.
Yeah, that's how we met.
Yeah,
We both invested in a later stage deal, but didn't spend much time, 15, 20 minutes. And then about a year later, I started following him on Twitter, and I was like, I would have said that. I did say that. It's like I said, it was like talking to myself. I was a younger, better-looking version of myself. But I said, I got to meet him. And when I met him, instant. Right. It was like, and being around him and the group of people who are all much younger than me, it's energizing. So that's a big part of where the energy comes from. Plus, I love this. I mean, I really do believe this is one of the technological evolutions or revolutions of our lifetime. Right. And if you can't get excited about it, I don't know why not.
Yeah. I was really, really happy to see that you used the word evolution instead of revolution, because it really is the natural evolution. Like, I've been in digital forever, too, myself.
Yeah.
I guess thank you first for sitting down with us, realizing that your time is very valuable, and you're traveling all over the place. So greatly appreciate you sitting down with us for the podcast.
Yeah, we're so tickled at the opportunity.
No, great to be here and great to spend time with people who are in the business and have been in digital for a long time and lots of success, and it's always fun for me.
I have so many questions.
Okay.
Do you have questions?
No, why don't you start? I mean, well, I guess I'll just go ahead and kick it off with the question about payments. So I'm really big into the idea of payments. Payments being, when you sit down and think about where payments are in the world, it's every single freaking transaction that you do is a payment.
Yes.
And so what are your thoughts on, I guess, how we get to more blockchain or more Bitcoin in the world of payments?
Yeah, look, I think you're exactly right that one of the biggest use cases potentially for blockchain technology and for cryptocurrencies in particular is medium of exchange and payments. The challenge is in designing cryptocurrencies, you have a choice, right? You can have speed or security. Blockchain chose security. It's the most secure blockchain in the world, but they're not going to be fast. So you have to think of it, I think, like protocol layers. We're going to have base layers, and then we're going to have second and third layers. And so whether it's Lightning Network or other off-chain transaction settlement protocols, that's how we'll get the speed. And so what I think is just so funny, it's this relationship of potential to capacity or capability. Think of a 9-year-old, how much capability they have versus how much capacity do they have. And how much would you have paid to have all the future earnings of LeBron James when he was 9 years old? Right? It would have been a good trade.
Yeah.
And so I think the same thing's true of Bitcoin. It's 10 years old, and it's still in its infancy in terms of development. So look, whether it's bringing M-Pesa, which is one of the biggest payment systems in the world, which is, think about it, cell phone minutes being bartered all over, Africa, on Silicon Savannah in Nigeria, not Nigeria, and Nairobi, Kenya. that will develop into new systems and new ways of payment. I think the challenge for payments, or the thing to overcome, is the first mover advantage that some of the Chinese companies like WeChat Pay and Alipay have, and even PayPal. Although WeChat Pay did more transactions in January than PayPal did last year. So, but I think it's a great use case, something we should all be focused on. But I think it's going to go to this layered building.
Right. So so we still got a little ways to go before it's going to really hit high momentum.
I think so.
Okay.
I think we're at the, that's what I love about this opportunity is people say, it's the end and the bubbles burst. Like, no, it's like Churchill said, this is not the end. It's not even the beginning of the end. It might be the end of the beginning, right? So we might be entering the fourth inning, of a Mariners game, but no, plenty of time.
Outstanding. So what was the two? You said capacity and
capability.
Capability. Yeah. So kids, it's like we're kind of new parents, and so I go to the experiences that I have with my first son. He's 3.5. So that directly makes me think the capability versus capacity. He will actually recite with me every other verse of a book called Cars Galore. And he's not even looking at the book, right? I'm just calling out the first line, and he just blurts out the second line.
And think
and we
of
switch back
that
and forth.
in terms of a capability, right? That we all marvel at, but his capacity to recite Shakespeare from memory 10 years from now in middle school, because it used to be high school. When I was at Blanchette High School, they made us do it. Now it'll be in middle school, maybe it'll be in grade school. I think my son was doing genetics in 6th grade. I didn't do that till sophomore year biology. So everything's faster, but the capability and the potential is so high. And the thing with digital youth, people who are raised in the digital age, that capability is so augmented because they've got the world's information at their fingertips. Right. I mean, I watch my 8-year-old, so I have older kids, 30 and 28, and then the little guy who's 8. And I look at him, and not that he's any smarter than the older kids, but his knowledge set and his toolkit is so much greater. And the things that he has at his disposal that he can use, and he devours things in a way that they couldn't, or I couldn't for sure, because I didn't have the same toolkit. Right. So and your 3.5-year-old, another order of magnitude. And the great thing about exponential growth, that again humans have a hard time dealing with. We all think linearly. We can't do exponential growth. We can't do S curves. We can't do. How is it possible a 3.5-year-old can be reciting? I don't remember doing that until I was 8, or So everything happens faster, and that's good because the human mind, we only use 10% of it.
Right.
The other trick that he does nowadays is that we have this little book of Korean jingles for kids. He can't read Korean at all, so we're Korean American, second generation. But he will also do the same thing with these Korean jingles, where I just play the music. Music can't
is the
speak
most
Korean at all.
Incredible thing for memory. Again, when I was growing up, there's a thing called America Rock or Schoolhouse Rock.
Oh yeah, I love that.
And I'm just a bill. I'm only a bill. I'm sitting here on Capitol Hill or Conjunction Junction. And those jingles stay with you forever. Yeah. And it's why we use mnemonics. You got the whole thing with that mathematical equation on the internet now with the parentheses and PEDMAS versus BODMAS. Yeah. And it depends the order of operations that you learned and which mnemonic you used and which you think goes first. And all those things are learning tools. But music and smells, like if I smell a crayon, it's like I'm sitting at my grandmother's table over near the Seattle Tennis Club to this day. If I smell a crayon, I am sitting
Yeah.
in Madrona. I mean, and that's...
Well, that's a good segue into the reprogramming that you've been doing lately.
Well, do you want to talk about that?
I thought you might be okay with it. We can cut that out.
Well, we can talk about it just to give you
Yeah.
context. I'm going through PTSD therapy right now. I've been doing it for 6 months now, 3 months before the child was born, to give me the mental foundation frameworks,
Wow.
so that we were protecting our child from any of the stresses that I had engulfed. And then now that the child has been born, we've been actually going through the trauma therapy.
Cool.
And so we've been learning about how you reframe like a really, really bad traumatic incident. And, I'll be like tears crying, talking about the experience. And then we'll start talking about, well, what if we swapped up this person for this person? Or who would have been the ideal person to have in the room at that time during that point of trauma? And I go, blah, blah, blah. And then we'll do a thought experiment going through like the bad situation reframed with that new person in the room and what might have happened, and then you get some more insights, and then that bad incident becomes like, oh, a learning lesson in life.
Well,
Yeah,
I think it's
crazy.
fantastic, because I think the biggest difference, so my wife and I thought we were going to have 4 kids. We had 2, no more. And the funny part of the story is, so say to the doctor, why not? He says, well, that's the funny thing. You check out fine. She checks out fine. You're just one of the 5% we can't explain. I said, wait, doc. Mathematically, that means in 20 years something could happen. I was off by 1 year. And so 19 years later, something happened. But what's interesting is we're way better parents with him than we were the first time. Not intentionally, but just because we're older and more calm. If you can be calm. So what you're doing, I think, is so fantastic, to be proactive about kind of putting that past in the past and being able to be more calm with the child. Because we've noticed it in spades, is that we're much better at dealing with stuff. Right? You have a little more financial security. You've actually done it. First child, you don't even know what you're doing. You don't even know how to be married.
Terrifying.
Right? It's terrifying. But if you have someone or something helping you, I think that's fantastic. So, and I have real life experience that says, because I'll see it in him as we start to get more nervous and we escalate, he gets more agitated. And one time he came up to me, put his hands up, and he said, your words are bumping into each other.
What?
Whoa.
He was 4 years old. 4 years old. Our words were like, yes, they are, and we will de-escalate. And he de-escalated, and everything was good. So it's calm is really good for everybody.
Yeah, actually, our son will be like, Mommy, do you need a hug?
There you go.
Yes.
I love it.
And then he'll be like, let's do over. Let's start over.
Do over.
Yeah,
I
and I'm
it.
like, oh, great. He's using all the techniques on me.
I love it.
Yeah, it's awesome.
I love it.
And I think also as leaders or people that are more influencers later in life, we carry a lot of baggage with us, like relationship to relationship, job to job. And so if and when you can make that opportunity to kind of clean yourself of that baggage so that you can really start fresh and new, I think it's something that's really...
Always. If you can get rid of the tapes of childhood, you're much better off. Because most people get ruined by them.
Yes.
And they can't get rid of them, and they plug in tape 17 and they listen to it, and they listen that, they didn't work hard enough, or they disappointed their parents, or they had that bad outcome, or they had the bully picking on them. If you're haunted by that, it's bad.
Did you see Molly's game by chance?
Yes.
So at the end, when Kevin Costner, they're sitting on the bench, and he's like, okay, I'm going to distill 4 years of therapy down into 4 minutes.
Exactly.
That was phenomenal.
Exactly. I know, exactly. I love 4 years and 4
minutes. And she
minutes.
just asked the exact questions also. I mean, that he knew that she really needed to know in an existential, situation and have some sort of closure to it in order to move on.
Perfect.
Yeah.
Great example.
Wow. So then I kind of want to segue into health. So you talked a little bit about health at the end of the
Talk
lunch.
about Beyond Meat.
Oh my God. We bought it at $80.70, and then yesterday I was like, honey, sell now,
Good
sell
for
now,
you.
because this
Good
is too
for
crazy.
you.
How is a share of Beyond Meat at $234 worth more than like Facebook or worth Microsoft or like any of these giant companies?
Yeah.
It's crazy.
No, it's great. It is the second craziest valuation I've ever seen. And full disclosure, right? I mean, we were early investors. We're seed round investors, and we've made over 100 times our money, and I'm really happy about that. And power venture capital, power venture capital. But we're really happy. And the thing about it is that it's got limited float. And there are a lot of people trying to short it because the valuations are stupid, and short squeezes are very painful in the short run. But you're smart to sell and take your profits.
It's still great.
Bernard Baruch had a great line. He said, "I made all my money by selling too soon."
Right. So so she was really into it, the idea, because she grew up vegan, and so I said, well, so we're plankton, angel investors. We're like the food for the sharks and the whales and everybody. Right?
We're plankton.
And so, I was like, well, let's treat it like an angel check. It's like 10K, so we can write 10K checks. Mm-hmm. And so I said, let me know when you want to buy it, and we'll just kind of play like that. Mm-hmm. And so I try to do a tiered entry. So I only bought, I think like 6,000 out of the 10,000. I said, well, we'll just, get the rest later on. Yeah.
And the next
and
day
it just kept on going and going and going.
Yeah.
Next thing we know, it's like $240 the other day.
Yeah. Well, the interesting thing about it is, look, people have this perception that it's good for you because it's not meat, and it's because that's what they've been told, right? They've been told that saturated fat is bad for you, even though there's no evidence that it is, and there's no evidence that statins actually have any efficacy at all. But it's a multi-billion-dollar industry, and the pharma companies want us to keep buying statins. Yeah. So I think it's not a bad thing to have other foods beyond hamburgers or sausages or bacon. The thing I don't like about it is there are some things in the manufacturing process that are a little dicey. Seed oils in particular, which are not good for you, and that's been proven. But I thought there was an interesting comment today. Said the FDA said that the protein used in Impossible Meats, which is the other one beyond meat, right. Impossible Foods, that it doesn't look toxic. That's not a high endorsement. It doesn't look toxic. So I think there's a lot of work to be done on that. And but on the bigger picture of health, my big thing is health is wealth. It's actually a hashtag on Twitter, health is wealth, because I believe nothing else in life matters if you're not healthy. Right. If you're sick, if you're struggling, if you're injured, if you're dealing with chronic maladies, you can't focus, you can't work, you can't earn a living, you can't have relationships, everything suffers. And so focusing on that, and one of the things I heard a long time ago, which I think is really cool, is they said, why is it that people never run out of gas, right? They don't exercise, they don't eat right, they do all these things that are the equivalent of getting gas in your car, like, recharging your body and meditating and eating good food, but people let that get way away from them and get in bad health, but they never run out of gas. Well, it's because the consequences are immediate. If you run out of gas, your car stops and you're done, right? So you find the 10 minutes to go gas up your car whenever you need to,
right?
Or charge your car if you have electric. But the key is that it's the immediacy. Whereas with your health, you gain a few pounds, no big deal. Your cholesterol goes up, no big deal. Your blood sugar, insulin response is bad, no big deal. But it is a big deal, and you just don't see it immediately. And so if there was like an empty light on you, you would make. Because you never find time. We don't find time. We make time. We make time for what we prioritize. Mm-hmm. And if we prioritize anything, right? Family time. I have this thing. I'm home. If I'm in town, which I won't be tonight, I'll fly home on the red eye. But if I'm home, I am home for dinner. And now at 8 o'clock, when he goes to bed, I may have to work for another 4 hours, but I'm home with him for those 2 hours. That's a choice, right? I mean, I've had people yell at me, like, what do you mean you're leaving? I'm like, well, I'll come back or I'll call you later, but this is important. So, and I used to not be good at exercise and diet.
I was going to say, I don't know how you look so fit.
Oh, because
with all the travel.
When did you have the turnaround?
It's the epiphany. So, if you look at my pictures, when I was growing up here in Seattle, I was rotund, husky jeans from Sears. And when I moved away, I was a little better. I did do sports and stuff, but I look at my early wedding pictures, I was a little soft. So when we got pregnant, when my wife got pregnant with the third child 9 years ago, she gave me a gym membership, which I could take one of two ways. You're a fat, and go do something, or, hey, I want you around with me to take care of this kid because when he graduates from college, we'll be 70, which is okay because that's the new 50. It's the new 50. And the key was that
Grandpa dads.
My grandpa dads.
We were grandpa dads.
Oh yeah. No, look, I was at the putt the other night with my 8-year-old and this little girl, and he were doing hula hoop, and she looks over and says, so why is your granddad here? Like, he says, no, that's my dad, very defiantly. And he does say, Dad, your hair's still black in the back. But the thing is, with my travel schedule, today's a perfect example, I was only getting to the gym once a week. Turns out that doesn't help. And so a friend of mine in California, who actually used to work up here at a venture firm called Voyager, gave me a disc called P90X. And P90X is this set of DVDs that you watch in your basement, and you do body weight exercises, push-ups and sit-ups and little hand weight stuff, and changed my life. Absolutely changed my life. And it's a 90-day thing. And what's cool about it, it's the same thing about everything in life. It's decide, commit, succeed. So you decide to do it. Mm-hmm. The average person drops out of their health commitment 17 days in. Okay? Yeah. You have to do something for 18 days to make it a habit. Everyone drops before the 18th day. So it's 30 days. You decide. You have to commit to do it for 30 days. The problem is in that first 30 days, nothing happens, right? You're still hurt. You're still in pain. Nothing. You see no evidence. Then you have to commit for the second 30 days. Now you're starting to see some change. And if you make it through the last 30 days, the 90 days, hence P90X, actually changed my life. And so that was the beginning of it, and that got me from out of shape to better shape. And then since then I've done some different things. And last year a friend of mine shamed me into running a half marathon with him, which I had never done. And I learned two things. I will never do a marathon, but I might do another half. But I will never do a marathon. But
the Power of Habit, that book for me was transformative.
Yeah.
Transformative.
Yeah. Because it really just broke it down into stories. Mm-hmm. Stories are really, really impactful.
Yes.
And then example after example after example. And so now when I try to adopt something, I term it as I'm trying really hard to get that into my habit loop.
Perfect.
So I just got to do that, and then it'll be with me. But until then, it's going to be hard.
Look, if it's not a habit, then it's an annoyance and a nuisance, and it's taking time from other things that you want to be doing. And when they say self-discipline is doing what you should do before what you want to do, which I'm really bad about, actually. But discipline, that's the other thing they say, whoever they is, you can suffer the pain of discipline or the pain of regret. And discipline comes to habit, and habit comes to commitment. Right. And deciding to do something is one thing. We all decide all the time. It's like people say, I've quit smoking 7 times.
Yeah. How's that possible?
No, that's not possible, right? You never quit. So, or I've dieted, 17 times. No, you never committed to it. You decided to do it, but you didn't commit. And that commitment, and that's true of anything, whether it's health, whether it's wealth, commitment and discipline is how people get wealthy, right? They commit to habits, they rebalance, they take profits like you did on, they don't get into hope, right? George Soros says, the reason I'm rich is because I admit my mistakes faster than other people.
Right.
The average person, right, they pull their flowers. As soon as they make a little money, they pull it out of the ground and they water their weeds. They say, well, I'm right and the market's wrong. And it goes down and they buy more. They double down. No, you should never double down. You should double up.
Right.
And I've been very lucky in my life. My mentor in investing was Julian Robertson, and that was because he was a UNC grad. I worked at UNC, and we had a big investment with Tiger, and he took a shine to me, and I glommed onto it, and I spent every minute I could with him, and I've been lucky in life in that I got to spend time with Julian, but more importantly, I invested with all the people that spun out of Tiger and formed hedge funds, and I've interviewed all of them. I keep these notebooks I should probably put it in a book someday, but all of these notes on what made Julian a great investor. And they would say the usual stuff. He believes in commitment, and he has high integrity. I mean, this is a guy who went through customs once with a pair of shoes on and sent them a check. Like most people lie about what they bring through customs. He actually sent them a check because he forgot. but he has perfect integrity, and he's hugely competitive, and he wants to win, he hates to lose, all the things. But the thing that really separated him was that he has the uncanny ability to double up.
Right.
And when he was wrong, he was wrong.
Right.
And he would get
cut
out.
your losses.
Cut your losses.
Yeah.
And the first loss is the best loss.
Right.
And hope, I say this all the time, hope is not an investment strategy. It is a 4-letter word. Right?
I've learned so well all the mistakes by making
of course.
all the mistakes. It's like
the thing about investing, you can't learn from other people's mistakes.
Right.
You must make them yourself. You must feel the pain in your gut. But learning, right? This was Dean Smith from UNC, the famous coach, Ralph.
Yep.
Okay, recognize the mistake, admit the mistake, learn from it, and most important, forget it.
Right.
Because what separates great investors, great musicians, great anything, okay, from the rest is the average person focuses on the last play. The greats focus on the next play or the next investment. So, how many times have you seen a basketball player miss a shot, go down and commit a stupid foul? A great player misses a shot, has instant erasure, doesn't even remember taking the shot, okay, goes back, plays good defense, steals the ball, makes a layup. A great investor or an average investor has a loss, and what do? They compound the loss by doubling down. Right? A great investor cuts his losses, finds another good idea, because they always have good ideas.
Yeah.
And one thing I hate about Twitter. So I love Twitter, and I love Twitter, and I'm literally addicted to Twitter. My wife will remind me that I am. Or
She's laughing because she's scolded me so many times.
And I love it. And I love it because it does a number of things. It's given me this incredible global network. It's introduced me to people. I mean, I met the president of the 2 biggest banks in Greece because I posted a picture that I was in Athens, and someone said, "Hey, you want to meet with the bank presidents?" I'm like, "Yes." So good things happen. I got this great network. I can try out ideas. I get instant feedback when I have an idea. People hate it. People like it. And what I love is if people hate my idea, I do lots of it. Okay? When people love my idea, I stop doing it. Because when the consensus loves something, don't do it. When everybody hates it, it's a good idea. But the key is that what I hate about Twitter is that, I lost my train of thought. What were we talking? We were talking about make great investors,
cutting losses.
Cutting losses. Yeah. So,
I actually had a riff off of the basketball thing. So apparently, Kobe Bryant, his coach, had so much confidence in him because I think the story was that it wasn't about him necessarily being able to guarantee points. It was more about, I see so much mental strength in him that he's willing to take a chance, to take that buzzer shot at the end, miss, and then come back the next game and do it again.
Exactly. Yeah. Winners want the ball. Winners always want the ball. Michael Jordan says, I've been trusted to take the final shot, 700 times, and I've missed half of them. Oh, that's what I was going to say. The thing I hate about Twitter is, what I love about Twitter is a microblog, right? I put stuff out there, and my wife reminds me I'm occasionally wrong, never in doubt. And she says, you can't say things so like that. I'm like, what do you mean? She says, you say things so forcefully. I'm like, well, what's wrong with that? She says, people will believe you. That's kind of the idea. But she says, well, you might be wrong. I'm like, I don't care. I'm wrong all the time. And what people do on Twitter is they call you out for being wrong. I'm like, no. That's why you're a bad investor. Because if you're worried about being wrong, then you're paralyzed and you never invest.
Right.
You never do anything. Scared money.
Yeah.
And so great investors are wrong a lot. In fact, they're wrong more than bad investors.
Right.
But when they're wrong, they cut. And George Soros, again, Stanley Druckenmiller say it, it's not whether you're right or wrong. It's how much money you make when you're right and how much money you lose when you're wrong. And so I want to have something that holds me accountable. I want people to say, hey, you made a bad decision. Yes, I did, and I learned from it. And I forgot it. And now I'm on to the next thing. Mm-hmm. And the one thing that really drives me crazy is when people say, well, 6 years ago you said this and it didn't happen, so now I don't believe you on this. I'm like, but they're unrelated. They're just totally unrelated. You have to judge the quality of this idea or recommendation or thesis on its merits and either accept it or reject it. And I was having the conversation before lunch today. Someone said, so you have all this great data and yet the market keeps going up. Why does it keep going up? Well, I said, technically, it's almost the same price it was 18 months ago. So it's really not up a lot in the last 18 months. And 18 months ago is kind of when I said it was really toppy at 2,800, and that would be the top, and then we'd have a crash. And we did have a 20% correction, and then the plant protection team came in, and we've got a lot of buybacks like Apple. Apple's got the same earnings as 4 years ago, but 20% increase in earnings per share, and people fall for it. That's stupid. Why are you falling for that?
I was shocked that it's up today. I mean,
but the thing about it is, all of it comes to, we're in a time where there's lots of uncertainty, and there's a lot of people that they're not comfortable where they're positioned because they don't have a lot of conviction. And that's logical. How could you have conviction buying Beyond Meat at over 100 times sales? Forget 100 times earnings, which you're going to lose money. 100 times sales, that stock could fall 95% and still be overvalued. And it would still be a huge home run from the original investment. But things happen when we get to these crazy periods, like 2000, which was the craziest. This is the second craziest. 1929 was the third craziest. That's not good company, right? That's not where you want to be. So you got to find something like crypto where it's easy to get excited because we're at the early stages. We're at the earliest stages of Bitcoin wealth accumulation. I mean, my tie today, right? It's gold on one side, Bitcoin on the other. Yeah. It's a little Libra scales. And what it says is that at some point, Bitcoin as digital gold is going to have the same market cap as gold. $8 trillion. That's $450,000 Bitcoin.
At least.
Now, at least, right?
Yeah.
And usually we're going to go higher than fair value.
Yeah.
And we could go to money market accounts. That's $220 trillion. $220 trillion around the world. Yeah. And arguably, I'd rather have my money in Bitcoin than in a bank, because you just saw today, UBS just announced they're going to charge their wealthy clients 75 basis points to keep their money at UBS.
It's the tide of more negative interest rates.
Yeah, it's wealth tax.
Hey, so I haven't told this to Arry, but this trade with Beyond Meats that's gone so well. So we got 150% back, which is just
great.
phenomenal in
it's
less
fantastic.
than 3 months.
Fantastic.
Just phenomenal.
Yeah.
Thank you.
So now
You're
I'm
welcome.
scared that she's going to be emboldened now.
I am emboldened.
Okay.
Is that trap,
No, look. There's a 2x2 matrix. Let's do a McKinsey 2x2 matrix. There are decisions, good and bad. There are outcomes, good and bad. The most dangerous thing in the world is what just happened.
Right.
Bad decision. And I'm not saying it was a bad decision per se, but based on valuation at $80 a share, it was a bad decision to buy the stock. Based on momentum and other factors, it was a good decision. So we'll put that in the middle. But the worst thing that can happen is a bad decision with a good outcome. And that's usually Vegas, right? People make a bet and they win, and they go, I'm going to take the house. And then they come back $3,000 poor. Although everyone I've ever met who goes to Vegas wins somehow. It's not true. That's what they tell me. But it's
the
like
losses stay in Vegas.
The losses stay in Vegas. Oh, is that how it works?
I think
so.
I think so.
But the thing is, what we all want in life is good decisions with good outcomes. But that's really hard.
I've generally had
Really
90% great investment decisions. Apple bought at 40, I sold at 80. I was like 100% return, I'm good.
That's good.
But then it went on to go multiples.
I know. But that's what I used to buy my condo. My first condo at 26 years old, you know?
Right.
And that's good, too, because real estate has been a fantastic investment, and you can lever it more.
Yeah.
I mean, you can lever stocks, too, but no one does. People are very comfortable levering real estate. And real assets have been a great investment. Like I said at lunch, the best asset in the last decade has been collectible cars because they're very scarce. Yeah. Scarcity is the key, right? Scarce assets appreciate faster than non-scarce assets.
Right.
And that's why I hate fiat currency, because not only is it not scarce, you can make more.
Yeah.
Island real estate always appreciates. Like Bainbridge Island over here, it's awesome. Why is it so awesome? Because you can't make more.
Right.
There's only so much waterfront.
Yep.
I remember when we lived here many, many, many years ago, we looked at a lot on Lake Washington. Oh, if only my parents would have bought that lot, because it would be worth a lot.
Right.
And, pun intended. The other funny story about that, just real quickly, is my mom, there's a big house, almost as big as Gates, on the point outside of Kirkland, It's this 33,000 square foot house, kind of looks like a castle out on this point. And my mom was the personal assistant for the guy who built it. Wow. And he was a single guy. He's since passed away, but he invented contact lenses for chickens.
What?
Now, they don't make the chickens see better. They make them see worse.
Wait, contact lenses for chickens?
Yes, because if you put too many chickens in a yard, they'll peck each other to death. So you put the lenses in so they can only see 12 inches, so you can see their food, but they can't see each other, and you can pack them in and get higher profits.
Holy cow.
And he made $1 gazillion. And so he's building this house, and my mom's his assistant, and everyone was giving him grief. So, well, what do you need a 33,000 square foot house for one person? And that's wasteful. He says, what are you talking about? I employ people. I pay lots of taxes. I make the city better. I improve the roads. I built a private road. Shut up. And I was like, yes, that's exactly right. Employing people, building community. Right. Yes. And so everything always has two perspectives. It's like one of my favorite movies is Vantage Point. Right? It's the guy where it's a story about an assassination, and they show 4 different movies of 4 different vantage points witnessing the crime. And you see totally different stories depending on where you see it. Or there's the picture of Prince William doing this, which looks like 3, but from one angle, it looks like he's giving him the finger. And so everybody's like, oh, Prince William's doing the finger. He's like, no, he's making the 3 sign. Because he's going to see 3 minutes. And
sorry. Well, okay, just keep that thought in your mind, okay? I'm sorry. But this is about you, so you're like this. So have you found, so this is kind of like a gender, sexist kind of a question. Mm-hmm. Have you found that when women investors get into the game, that when they're good, they somehow are like really, really good?
Oh, there's data on this.
Over men.
There's data on this.
Okay.
It's not anecdotal. There's data. So if you look at the data, and what I mean by the data, so there's a couple things. So Terry Odine, professor at Berkeley School, wrote a paper called Boys Will Be Boys. And he studied 30,000 brokerage accounts, men and women, and the women outperformed the men by over 100 basis points a year.
Yeah.
Why? For 3 reasons. Guys are overconfident. They trade in things they don't know and understand, and they don't have discipline. And women don't trade in things they don't know about and understand. They are very disciplined, and they don't overtrade. And in fact, Fidelity's best performing accounts aren't women; they're dead people.
Huh? This mythical story, about the report that was done on the best accounts, best performing accounts, and apparently they found that out, and then they scuttled it. I think it was Downtown Josh Brown.
Yeah, I mean, the reality is the accounts, that story was disproven, but the data says that those accounts that trade the least, I mean, my father-in-law is a broker for UBS, by far his best account is his woman who's 94 years old. Her cost basis in ExxonMobil is 33 cents. She's never traded. She's held it for 60 some odd years. Yeah. Or the people who bought one share of I talk about Amazon, since we're here in Seattle. So Amazon went public 20 years ago. Been a great stock, right? But every year that it's been public, it's at a double-digit drawdown. Every year. Mm-hmm. The average is 31%. Twice, it went down more than 90. So the only people that have held it since the IPO are Jeff and his mom and dad. Right? I mean, literally, because everybody sells when it went down 95% in 2001 and 2, that was a big thing, and everyone thought it was over. Mm-hmm. So, but on this thing, so there's a great book, I think the best book ever written on investments, called The Dow Jones Averages, and Dow is TAO, and it's a merging of Chinese philosophy and investing. And it basically talks about one of the differences between guys and gals is right brain, left brain. So guys are much more right-handed, much more left brain, much more analytical, much more backward-looking. We drive looking in the rearview mirror. Women, by and large, not that they're necessarily more left-handed, but they have more right brain, creative, and it's called women's intuition for a reason. Mm-hmm. Right? Things that are called something are called that for a reason. Right. And that's one of them. And so what he talks about is the best investors are whole-brained. They're people who can be both analytical and creative and forward-thinking. And so
there you go.
One of the reasons that women who do get into the game and who do practice it tend to be quite good. Now, that doesn't mean that all men are bad. There are plenty of men who are whole brain investors and are really good. Doesn't mean that all women are going to be good, because there are plenty of women who aren't as right-brained, and they're very left-brained and very analytical and very militant, and that's where we get in trouble. And there are plenty of people who are arrogant and overconfident and overtrade.
Oh, yeah.
But generally speaking, there is data to support the thesis that women are good investors.
Good. I have a good partner then in this little venture of ours. Do you remember your question?
I have a couple.
So Arry, like, in the podcast, people can't see us, but Arry had the biggest shit-eating grin on her face while Mark was explaining that, so she was enjoying that.
That's good.
Thank you very much for the vote of comments. I could use it right now. Okay, so it seems like you consume a lot of content. I mean, I was just like astounded by the amount of statistics and numbers that you knew.
I'm old, and I do have a good memory. I have a good memory, but I read a lot.
Like, how much? So, like, what is your day? You wake up and you read for an hour? You're reading all freaking day on your Twitter, and then you're, like, clicking links and reading articles? Or, like, what does that experience look like?
It definitely has changed. Okay. So, in the olden days, I would print lots and lots of letters, manager letters, and research reports, and I would have these stacks, and I would just sit and I would read. And I like the old school reading. I like to underline, and I like to write notes. And because the more senses you experience something, the more you're going to remember it. Mm-hmm. And I'm also a visual learner. I don't forget things that I see. If I hear it, not so much.
Me too.
Like names, I need name tags. I'm glad you have name tags because I've already forgotten people's names when I meet them. But if I see it, I remember I had a meeting yesterday in New York, and this young woman comes up and she says, "Nice to meet you." I'm like, "No, nice to see you." She says, "No, we met." I don't remember where, but she says, "Oh, well, yeah, when I was a student at Wharton, I tracked you down after your speech." I'm like, "Yeah, because Amy Wong invited me to speak." So that was my classmate. I'm like, "Yeah, I know, because we met." And I didn't remember how we met, but I do. So that I'm a visual learner, and I like to synthesize. So I like to draw inferences and conclusions on different pieces. So I try to consume lots and lots of content, but I don't take anything at just face value, because then what I try to do is what I think is the most important thing that many people don't spend enough time, is to actually think. And to think, you actually have to spend time alone in solitude. Solitude, in fact, again, I think the best 6-7 pages you'll ever read on leadership is something called Solitude and Leadership by
His Arry is writing furiously.
So this is a speech that Deresiewicz made to the plebe class at the West Point inauguration. Inauguration. And not inauguration, that's the president, but like the first day of class for the plebe class. And he basically talks about that most of us are indoctrinated into this world where we're supposed to be with people, and we're supposed to follow the rules, and we're supposed to have these regulations, and we don't spend enough time thinking on our own. And if all you do is take other people's views, and I could do this right now. So I could say, "What do you think about X?" And I just pick X. The first thing that will come out of your mouth will not be your thought, but will be something you read or you heard, and we all do it.
Yep.
And it's because, unless I'm lucky enough to pick something you've actually spent a lot of time thinking about, but most of us we gather information, we heard, "Oh, I like that, okay, I remember that," and that's what you spit out. And what we should really do is the opposite. What we should really do, and there's a book about this called Belief, that humans form beliefs the wrong way.
Yeah.
We're given them. Right? Our parents give us beliefs on religion, on culture, on friends, on political parties, on whatever it is. And we never step back and say, "Well, do I believe that?"
Start questioning it.
And so the way the belief works is you're given your belief, and you reject any data that counteracts that belief. No. What you should do is take all the data, then see what makes sense, form a belief, and then reject. And that's another thing that's a problem with Twitter and other social media today, is the algorithms now are feeding us only what we like or believe.
You're in a thought bubble.
The best people seek alternative views.
Mm-hmm.
So I will actually follow people that I know I'm not going to agree with, just so I can listen to their crate numbers. Because they might be right?
Yes.
I mean, I'm not always right for sure, but even ideologically, I want to hear the other side.
Yeah.
As crazy as I might think it, and I said, the crazier the idea at the time, the better the idea. In fact, it's funny, when I was at Carolina, we used to keep track. So we had virtual discretion. And that meant, 95% of what we recommended the board would approve. But the 5% they didn't approve did way better than everything else. Now, that wasn't because we were smart and they were dumb. In fact, just the opposite. It was that 5% was just so crazy at the time that they, as a group, couldn't make the decision. And that's one of the things in the Dow Jones averages. And also, again, the best 2 pages ever written on investing is called Group Stink by Barton Biggs. And it says why groups can't make good decisions and why the old saying of investment committee should be made up of an odd number of members and 3 is too many. So 1 is always the better decision maker because a group will dumb down the decision. Like if I say to the group at lunch day, what's the best place to go have lunch in Seattle? I'll get McDonald's. If I ask anyone individually, I'll get awesome answers. I'll get a great Korean barbecue. I'll get a great, sushi. But in a group, well, they might not like Korean barbecue. They might not like sushi. So I'm going to say American. Well, just McDonald's. And so the group dumbs it down. And that's why those really great ideas, whether it be evolutionary technology like the internet, which everybody feared, and very few people invested in Amazon, very few people invested in Google, very few people invested, because the glitterati, Paul Krugman, was telling people it'll never be more important than the fax machine. Or the mobile phone, right? Why would anybody want a mobile phone? Why would anybody want a supercomputer in their hand? And now they're attached to our hand. We get carpal tunnel syndrome from them. So, and same thing with blockchain is, well, I don't need blockchain. It's just a slow, dumb database. Right, but it's one database. Right now there are 7 databases that are used and have to sync up to settle a stock transaction. That's why it takes 2 days. Right. It should take 2 seconds. Literally, it should take 2 seconds. It's done. And that's what blockchain will do. And one of our biggest investments in our fund that's going to be a monster multi-billion company is a company that says when you originate loans, there's 7 different people with their hands out charging you 8%. He's got it down to 1 person charging 5%. It's really good for us. We're going to make 5% instead of 1 piece of 8. And people are going to get better deals because they're going to pay 5 instead of 8. Better.
Can you say what the name of that company is?
It's called Figure.
Figure, okay. I've not heard
fantastic company, and it's
Does they got a funny spelling or something like that?
Nope,
okay,
just Figure. Yeah,
okay,
yeah.
all right.
And they make home equity lines of credit on the blockchain, and they're eventually going to originate mortgages on the blockchain.
So the comment about blockchain being slow and dumb.
Yeah.
So that's the same observation that Alex Mashinsky made. So he's said this multiple times, but he said, I was there, like getting pitched by the Google guys. And I'm like, this is dumb. There's so many other search engines, and they're already got so much lead ahead time of you. And he passed. So it shows how smart he is. Then he says, I saw Bitcoin, and I said, I'm technical. I can see all the merits of it. This is like slow and dumb. I'll pass. Yeah. Well, now he's got a massive startup, Celsius Network, where he's doing all kinds of work in it now.
And well, at least he's
and he
reformed.
admitted his mistake.
Hey, if you can admit your mistake and move on, that's great. There are plenty of people who never do, and they just keep missing. Krugman's one of them. Peter Schiff's probably another one. There are lots of these guys, and look, it's not that they're bad people. It's just they have such a vested interest in the status quo. Right. And if you're one of the elites and you benefit from the current system, if you're a banker. Right. Or, you're Warren Buffett and 46% of Berkshire Hathaway is financial services companies. Right. Yeah, you don't want this to work because it threatens your livelihood. Now, probably doesn't threaten his livelihood at all. But the reality is, over time, new technology is going to march on, right? It's the nature of the beast. And smart people are going to migrate to places where they can create really big ideas and create substantial pools of wealth. And right now, I said it's the only second time in my career, and I got gray hair to prove I've been around enough time to see it, that second time I've seen this level of talent migrate in one area. And in 2 things in investing, follow money and follow the talent. Right. And money tends to go where there's opportunity. Not always. People, Theranos, bad investment. But not everybody's great, right? Not all women are good investors. But she was just a scammer. But she's like Madoff. He wasn't a hedge fund manager. Exactly. Well, they call him a hedge fund manager. There's no hedge and no fund. Yeah. It's just a bad guy. Just an evil guy. Yeah. But they're all, wherever there's money, there'll be scammers. Mm-hmm. And there are some scammers in crypto. There are. But it's only like 10%, right? Yeah. I mean, there's 90% of the stuff is really good. Some of it, like all these utility tokens, they're just pre-seed stage venture capital. Yeah. That's a 95% loss ratio. That's not surprising, right? If I did a pre-seed stage venture capital fund, I would expect 9 out of 10 to go to zero. But that one might be a 100-bagger. Right. Mm-hmm. But that's the risk of pre-seed. Then you go to seed, a little less risk. Maybe 6 out of 10 go to zero. And then I do later stage. Maybe only 2 out of 10 go to zero. Mm-hmm. And then if I get to late stage, really late stage, hopefully they all go well. But I don't make as much money. I make 2 times or 1.5 times. Right. Mm-hmm. And pay somebody a lot of fees. But risk is what we all exist for, right? Mm-hmm. We are paid to take intelligent risk. That's what investing is. Mm-hmm. And we have to choose what kind of risk we want to take. We can take credit risk, we can take equity risk, we can take innovation risk, we can take liquidity risk, we can take leverage risk. There are lots of things that we can do, but at the end, you pick where you have your edge. Do you have an analytical edge? Do you have a network edge? Do you have a systems edge? Do you have a... most people don't have this, but some do. Do you have an edge in getting out ahead of trends? My favorite story, my very first meeting I ever took with a wealthy client when we were starting Morgan Creek was down in Charlotte, North Carolina. Met this guy who's worth $300 million, walks in, little bow tie, 80-plus-year-old guy. Aww. And we're sitting down chatting, and he's interviewing us, and I said, well, sir, tell us how you made your fortune. And he says, well, you see that map on the wall? And he pointed this map and had these little bullseye circles. He said, well, I just kind of sit back and figure out the path of progress, and then I buy land one circle out, and I wait. And we went, that's it? I said, yeah, that's it. And I said, wow, patience is a virtue, and you have to be able to see the path of progress. But again, he didn't say, boy, I'm going to invent something new, be a biggie entrepreneur. I'm just going to see where the activity is. I'm going to follow the money. I'm going to follow the talent. And then I'm going to get ahead of it, and I'm going to be patient. And the same thing's true here, is if so many people are spending time on Bitcoin, there's probably information content there. If everyone starts spending their time on Bitcoin Cash, which they probably won't, but if they did, there'd be information content. Or Ether versus Ethereum versus EOS. Where's the time? Where's the people? Where's the talent? And that's the easiest way to figure out where that path of progress is going to be. And then it's about patience. And then what's really cool about now is, we talked about this earlier today, is the internet. Think about how big the internet is. Think how much wealth has been created. But it was small because it was being built on crappy technology.
Yeah,
client-server technology,
2400 baud modem.
I mean, the first T1 line was like manna from heaven, and it was like $10,000 a year, and crazy. And then we got to the mobile net, and the first feature phone. I mean, we have this scholarship at Notre Dame, and we try to attract kids from all over the world to come to Notre Dame who wouldn't otherwise go. And we have this relationship with this school in Africa, and they get the best kids from each country in Africa. And one of our students was from Zimbabwe. She typed a 17-page essay on a feature phone.
Oh my gosh.
No typos, no nothing. She took a 23-hour bus ride for the interview. Did the hour interview, and then took a 23-hour bus ride home.
Holy cow.
That woman came to Notre Dame, great experience, doing great things in the world. I mean, that's what's out there. But a feature phone, not a smartphone, not a computer, right? In Zimbabwe, I remember in the interview I asked her, I said, your country, this is an unfair question. I said, your country just went through a massive hyperinflation. I don't really understand how it happens. Do you have any thoughts? She says, well, I have a 4-point plan to fix it. What? Like, what? He says, yeah, you do this, this, and this, and, wow, you should be president right now. And maybe she will be. But, there's that capability out there, and given the opportunity, which she was by African Leadership Academy and then by our program, she's the genius, right? She'll make things happen. But my point there was simply that the feature phone was bad, but it was still better than what we had. Mm-hmm. And then the first iPhone. what does everybody need an iPhone for? And that's a keyboard. And I said, I'll never have an iPhone because I can't use that keyboard. And I kept my BlackBerry up until 2 years ago because I just love the tactile keyboard. I even tried to buy the new BlackBerry.
The Key 1. I have the Key 1, and now there's a Key 2.
I had to give it back because I bought the Key 2, and it's top heavy. I kept dropping it because they tried to have the screen and the keyboard, but you can't. You have to have a smaller form factor to have the keyboard. Yep. So I took it back, and now I have this stupid thing, which I hate.
Did you buy the first iPhone? Yeah?
So just follow what she does.
Yeah, exactly. Eventually I did buy one.
I had the first smartphones. I know we're kind of over on time. We're at 2:45. How are you?
I got a couple minutes.
Okay.
Do you have any dying questions?
Well, just a quick last one would be, I'm a big fan of William O'Neill, Investors Business Daily. He's got his CanSlim method.
Yep.
Quick thoughts on that?
Look, everyone says can't make money looking at charts, can't make money drawing squiggly lines on a page. William O'Neill has a really big business.
Right.
Because you can.
Right.
Technical analysis works. It's like voodoo, right? Everyone says, I don't believe in it. But you don't go in places where they have it because you're afraid. Or, you don't believe in horoscopes. You don't believe in lucky numbers.
Right.
Or, how many people don't step on the line, just step on a crack, break a mama's back, etc. So we all have superstitions. We all have these things. But technical analysis works. We know it works. And I'm a big fan of William O'Neill as well. And one of my favorite managers of all time, all he did was he got the packet on Sunday afternoon in the mail. Sunday night, he would spend 4 hours looking visually at charts. That's the way I am. I just look at charts. I haven't done a model on a company in 20 years. I have no interest in trying to guess, are they going to increase sales by 1.6% or 1.8? I don't care. I can tell behaviorally if people really like something by the way they're either accumulating the stock or distributing the stock. And I don't trade stocks for a living, but I try to look at stocks from the standpoint of what industries, what sectors, what things are moving.
Right.
So that's a long-winded way of saying I like William O'Neill, and I think the fact that more people don't like him that do is a good indicator of the value.
Yeah. Because when you get into it a lot more, it's about, I think the ratio is 70 technical, 30 fundamental. Yeah. So it's not all just looking at pictures kind of a thing. Right. And so, I've been a fan of their work. And cool. Part of me, I do have to take a step back and say, well, it's the service. There is a service behind. There's a newspaper. There's digital services.
The challenge with all these things, though, is ubiquity. So there's this famous manager in Chicago, Richard Driehaus, and when he first started, he was the best. He crushed everybody. He was a small cap manager, and every one of his stocks looked like a hockey stick. And how did he do it? Well, he did two things. One, he paid brokers 10 cents a share instead of 2, so he would get first call. Genius. Absolute genius. Just incent people to give you the first call. But the second thing he did was, but the problem is that can be replicated, right? Other people pay 10 cents or 11 cents, like Stevie Cohen, and get the first call. Or give bigger volume. So you're paying 2 cents, they're giving bigger volume, and they get the first call. But the second thing he did, which couldn't be replicated, was he was the first customer of NewsEdge before there was Bloomberg. And so he would literally get information, not illegal information, but he would just get information ahead of other people who didn't want to pay for the service. And so when Zacks originally came out in Chicago, they were doing earnings estimates. Earnings estimates actually worked because only certain people subscribed. And if you subscribed, you had an edge. First company I worked for called Disciplined Investment Advisors. We were the first customer of CompuStat. And so we got the tape, and that was back in snail mail days. We'd get the tape 4 days ahead of everybody else. Oh, wow. So we had 4 days to put on trades before everybody else got the tape. And so those edges go away. And so anything that has a paywall is going to have an edge, whereas things that are free, like now, earnings estimates are everywhere. So the earnings estimate doesn't really work. So now it's a game. I call it the high jump game. You take the bar off the stand, you put it on the ground, you jump over, and you claim you're the high jump champion.
Right.
No. If you told me a year ago you're going to make $1, and then last week you told me you make 10 cents, and you made 11, that's not a win. That's not a beat.
Exactly.
You said you'd make $1, you made 11 cents.
Right.
No, last week I said 10. Right. But a year ago it was $1. Right. And that's why I think the market is so overvalued right now in the equity world is earnings estimates are collapsing because economic activity is collapsing. And we're likely on the verge or maybe already in a shallow recession. And that has negative implications for lots of things. And the only thing that's kept the market up is the hope of lower interest rates allowing us to pay higher PEs. But that's illogical because a lower interest rate implies a lower growth rate in the future. So you should pay lower PE today for lower growth. But that's not the way human beings work.
Right. It's too much math.
Yeah, too much math.
Too much thinking.
Go ahead.
I noticed you're wearing a bracelet.
Yes. Friendship bracelet, yeah.
As you explain that, could I look at your hands?
Sure. Sure.
She's got a lot of beliefs.
So, all right. So,
hands.
Well, no, I'll tell you a funny story about the hands. So, my friendship bracelet is from my 8-year-old. So he goes to a bilingual school in Spanish. So, really cool thing is, so my wife stayed home with the first two, and she then ran something called Meals on Wheels. It's a charity that delivers meals, and she wanted to keep doing it. So we had to get a babysitter. So we got a babysitter, and the babysitter was from Argentina. So she's spoken solamente español to Will since he was 5 weeks old.
Oh, wow.
So he's bilingual. And so I'll say to him all the time, I'll say, Will, ¿cuántos? He'll say 3. I'm like, no, en español. He's like, Dad, you don't speak Spanish. I'm like, ouch. Okay, truth. But he made this friendship bracelet at their carnival. But the other funny story is, in order to keep up with him, I use Google Translate. And so one night we're practicing, and I'll speak into Google Translate, and I'll say, okay, what did we have for dinner? And it'll spit out the Spanish. I'll make him repeat the Spanish. And so I said into Google Translate, when I grow up, I want to be a fireman. He said, no, Dad, I want your job. I want to be the head of Morgan Creek. I said, okay. So what we try to do is we try to buy things before other people really understand them. So what would you buy? And he said, computers with holograms. I'm like, oh, I'm done. I'm retired. You're the boss. Yeah. Where did that come from?
Holy cow.
I mean, off the top of his head, 8 years old, computers with holograms. Well, because he had seen in one of these TV shows, so TV's not evil, TV shows, a computer with a hologram. He's like, that's cool. That's coming. I was like, wow. So just the other day, this weekend, we're out at the putt-putt, and he says, Dad, I'm either going to be a fireman or the boss of Morgan Creek. And like, okay,
give me both.
I think
weekend
both.
fireman.
Yeah, weekend fireman. Exactly. All right. So the funny story about my hands before you tell me what you learned is, so when I was 22, first job, got to go to my first conference in New Orleans, and I'm totally into all the superstition stuff and conspiracy theories. So I went to a palm reader and a tarot card reader. Ooh. And the palm reader was totally freaky. So the first thing she said is, you have healing hands. I'm like, what does that mean? She says, well, you have little crosses in the middle of your hands, so you're going to be a doctor. I'm like, well, that's actually what I was going to study, so that's kind of interesting. And I did study up until senior year. Decided not to go to med school, but I did spend 2 summers doing emergency department work. Second thing she told me, you said, when you were 18 years old, you were very sick. I'm like, whoa. And I wasn't sick like a disease, but they thought I had an aneurysm, so I had to have tests, and turns out I didn't, thankfully, and I was fine, but I was very sick and in the hospital, and so she was right. Third thing, which was crazy, said you're going to have 3 kids. So, I go off, and we had the first 2, we have 2 kids, and then we stopped, and I'm like, she was wrong. Then we have a 3rd kid. So she was spot on. So
2 girls, 1 boy.
2 boys, 1 girl.
2 boys, 1 girl.
Yeah.
Oh, you read the other way, huh?
All right. That's pretty cool, but you can see 3.
Boy. Yeah, there's definitely 3.
Oh, that's so cool.
And you actually, are you right-handed?
I am.
Yeah, so you end up with more kids than you were actually supposed to have.
Oh, wow.
Yeah, so you're supposed to have only 1, and you end up with 3. It says 2 girls and 1 boy, but it's...
That is so cool.
Yeah. So maybe 1 boy is a little more feminine energy than the
Interesting. It's certainly possible. I mean, he's only 8, so he is definitely more whole-brained. That's very interesting. Cool.
And then you have the M, so those that have a lot of wealth have the M.
Oh.
So you have the M on both hands, but you had a little bit of a midlife trouble somewhere.
Who doesn't have midlife
trouble?
troubles?
Oh, amen. And I did.
You
oh,
did.
boy.
So, and it was a very significant one. It's on both sides. But you have very good health. You're naturally destined for good health.
Wow. But that is amazing, because I did... And I say it's a story for another day, and it requires alcohol.
We like that stuff.
I did make 2 bad decisions with partners, and I learned a couple things. 1, greed changes people.
Mm-hmm.
When we were not successful, everyone did their job. When we
Yes.
became successful, people got greedy and
Mm-hmm.
bad things happened. So that is correct.
Mm-hmm.
But I also learned a valuable lesson that you should be more thoughtful on the front end when you're thinking about partnering.
Mm-hmm.
You know, like you would if you're going into a relationship.
Like a marriage.
But yeah, but anyway, that's pretty good. I like it, and
Good stuff.
it is good stuff. I like the health part because health is wealth. Bring it all back to where we started.
And then I don't know if in terms of like blockchain world and investments,
Yep.
is there a type of blockchain technology, application, protocol, something in the world of blockchain that has not yet been built that you would like be seeing built?
Oh yeah, what do you
Oh
want?
my gosh!
What do you want?
Yeah, wow, that's a great question. There's so many things. I mean, look, we're still so far away from DApps, you know, decentralized
Yeah,
apps,
yeah.
and there's the big argument. Oh, there's no demand. Oh, there's demand. You know,
What can
I
you
would
say?
love. Well, look, I would love anything where I control and I get compensated for my data. Right?
Okay.
I mean, you think about it, and it's starting already, right? I mean, if you contribute to a community, you should get rewarded. There's a new DApp being created that we met with that if you contribute to the community, you get paid. And what I like about the way they're doing it is right now you think about it like on Medium, the claps and stuff.
Yeah.
Everyone's claps are the same. But that shouldn't be the case, right? If I write something about health and you're a nutritionist, your clap should be magnified. And his claps should, get negative that, because he's eating pork rinds. But
Which I love.
I'm just kidding. But it's people with knowledge should have higher standing in the community. And then so I think that's one area where I'd like to see it built.
Okay.
I do think provenance is obviously a lot of people have thought about that, and the projects at like Walmart and others. The idea that lettuce is contaminated, so you throw out all the lettuce is silly, right? We should know where every head of lettuce is from, which farm,
blockchain.
and just get rid of that. So that's clearly blockchain. Actually, I got approached by, it was a total scam, but it was a good idea. This Canadian company, and they were going to call themselves Cobalt Blockchain. I'm like, well, why? And they said, well, we're going to try to get conflict-free cobalt, and we're going to use blockchain to show the provenance. I'm like, okay, that's actually a good use case, fine. Well, how much cobalt do you have? Well, I don't have any. Well, how are you going to get it? Well, we know some people in the Democratic Republic. I'm like, oh, just stop. So basically you did a Google search for the two words that were the highest, and you just are going to rename your company Cobalt Blockchain. So it did a pump and dump. But the idea of conflict-free, whether it's diamonds or minerals or products, using blockchain is interesting. So I think that's an application. I do think payments is one where we need to get those second layer and third layer technologies that allow us to have speed and volume.
Security.
Along with security. Because what gets appended to the ultimate core blockchain, whichever one that is, doesn't have to be fast. Right? We can do a lot of stuff in the other layers. What else would I like to see? I think I would like to see really anything to do with ownership. So security tokenization to me is a must, and it's coming. And I wish it would come faster, but there are a lot of people that don't want it to come fast. So a lot of ingrained interest. But I do think that use case is fantastic. I mean, I think I talked about it today at lunch. Think about the Plaza Hotel. If you could fractionalize ownership of the Plaza Hotel, they didn't. They talked about it, and we talked to them about it, but it just never got around to getting done. And but I do think there's one hotel that got done small scale. We talked to a family in London about doing this big market in one of the big squares out there. It'd be awesome. Right? Because
She has the Peninsula guys
yes,
to do it.
Peninsula.
They were just visiting.
That's good.
Yeah.
Well, and another thing that again, topic for another day, but you guys probably have more insights into it. What I love about blockchain is that it's global, and it really has its roots a lot in Korea. which continues to be voted the most innovative country, and you go there and it's just fantastic. I was just there a couple months ago, and then you got the Chinese influence and what's going on there, and you got the Russian influence, and you got the South American influence, and people are so American-centric, and we have this American exceptionalism. It's all about America. Well, America is a small percentage of overall volumes and overall uses, and what I'd love to see, not related to tech, but related to regulation, is I'd love to see the U.S. regulators wake up and say, we could capture the dominant position, or we could push it away. And right now we're pushing it away.
I know.
And that makes no sense.
No sense at all.
And there are a few people in Washington with intelligence that we've seen, but there are a whole bunch without intelligence. Yeah. And instead of fighting Zuckerberg and Libra, how about saying, well, how could we work together to make this work? Because if we had a payment rail that 2 billion people around the world is controlled by a U.S. company with the blessing and background of the regulators in the U.S., that would be better than having it go rogue. And if he doesn't do it, China's already said, well, we're going to do it.
Yeah. Yeah.
And they have all the tech and all the...
It's like the joke from Argo. Sir, this is the best bad idea that we have for you.
Yes, exactly. And
please improve this.
No, and on that note, what we're all playing in today, blockchain technology, cryptocurrencies, Bitcoin, and other use cases, it is the best idea of our age. Is the best opportunity of our age. It's the most fun. It's the most fun people. It's talent, migration, great ideas, and this natural evolution, this financial evolution, this Darwinian evolution of technology, it's not going to stop. Mm-mm. And we can fight it, right? And countries have tried to fight it, and they end up losing. And the difference today versus in the past is, what we talked about earlier, is this centralized versus decentralized. Centralized, hierarchical organizations are easy to kill. Mm-hmm. Decentralized are not. Mm-hmm. And so the more decentralized, the more global, the more borderless. Mm-hmm. And look, I love the fact that we live in a world that is less bordered and less colored. We watched Remember the Titans with my 8-year-old the other night, and it was awesome because he's saying, well, why did they treat them that way? And to him, black, white, yellow, brown, red, it's all the same. Because he goes to a foreign language school where he's a minority. And so he doesn't see it. And that was kind of an interesting, so we're having to explain, well, back then it was a little different. And, there's all kinds of stories on, Asian culture and this coast and, all kinds of stuff. So, but the world now is different. And there's more acceptance, there's more integration, there's more collaboration, there's less intolerance. Now, the leadership around the world, unfortunately, is going the opposite way, going to more nationalism, more protectionism, more mine, less us. Yeah. That's bad. Mm-hmm. And, again, I live in, seems like location central for the bad Americans, with the send her back chants and the using the bad language to label African American people. So there's some scary parts to the South still, and we got a lot of work to do. But all of what we're working in and talking about helps break down those barriers and make it better.
I have an idea that I've been percolating on. I haven't done it yet, but I'm thinking about. Yeah. So I would love your just conceptually messaging. It doesn't really, the messaging layer does not exist in the world of blockchain yet, from what I can tell. Like if I wanted to send out a message to all the Bitcoin wallets, there's no way to do that today. But what if there was a way?
Maybe there is.
I don't know. I can't think of it, but I think it's interesting.
Maybe
and I'm
we're
trying
from
to
somebody.
So I think the idea is sort of like a decentralized, peer-to-peer and also one-to-many communication that would replicate the experience of like Signal. So for all the Bitcoin holders that want to be anonymous and secure and private, you could still capture that experience. Yeah. But the ability to communicate does not exist today. So then, like in the ICO days, we're stuck to Telegram or Discord or Slack for communication, but it's really not a good way to build community.
Absolutely. No, I think it's very interesting, and in a smaller scale, in just fintech, in just financial world, it's like Bloomberg Messenger, right? All the users of the terminal had this advantage of being able to talk to each other.
Yeah.
But the communities are what drive network adoption and drive wealth effect. So I like it.
Okay.
All right. Let's work on it.
Okay.
All right.
Thank you so much, Mark.
No, this is fun. Thanks, guys.
Anything else? Anything else, sir? No?
Big fan.
Oh, thank you.
Can we take a photo too?
Absolutely.
All right, let's close it out.
Hi all, this is Goldbug from Berkeley by way of Charlotte. None of the statements or opinions expressed in this podcast by the guest or its host is to be taken as financial or legal or psychological or dietary advice or a solicitation of any kind to participate in a conservative or risky or speculative financial instrument that may or may not require accredited investor status as defined by either the Securities and Exchange Commission or the Commodity Future Trading Commission of the United States of America or independent thought and rational thinking from the laws of humanity. By listening, you acknowledge that host Arry and Day and their guests are not financial advisors or legal scholars or psychologists or dietitians of any kind, but only humans and not sentient intergalactic alien life forms. There shall be no reliance by listeners to the representations made in this podcast as being factual, fiduciary, or any other big vocabulary word you can think of. All statements made in this podcast by any living or dead or unborn or zombie or robotic entity in the past, present, or future of the space-time continuum of the known universe are purely ironic or coincidental thoughts and opinions. Moments of sarcasm, sadness, education, glee, entertainment, or any other emotion found in this podcast are fully your responsibility and reaction that may or may not be intended for the listener in any way, shape, or form. This podcast contains adult information. Discretion is strongly advised. Thank you for listening.
On your mark, get ready to race. 1, 2, 3, let's blazing. Buckle your seatbelt, unten the sea and blazing, saving the day. Buns, buns, buns. Gimme some speed. Blazing the monster machine. Sailors, blazing the monster machine. Sailors, blaze.